My name is Attorney Johan Confidente, real estate lawyer in Punta Cana, and today I would like to give you more information about buying the property as a corporation or as an individual. And the reason that we want to do that is because most of our clients are always concerned at the moment of buying a property whether they want to incorporate their existing company in their country or they want to create a new corporation here in the Dominican Republic to hold the property in the name of the corporation. When we get to that point, then we want to know what is more beneficial to me as an investor, whether having the property in my personal name or putting it in the corporation. Today, I'm going to give you some examples of that will help you to answer that question. And at the same time, I'm going to talk about the tax implications as a corporation, as an individual, and what are the further obligation in terms of the taxes, whether if you have to declare, report in your country when you have a corporation in the DR. Let's get started. Well, as we have here, corporation versus individual. Number one thing, I would like to tell you, if you have a company here in the DR, to hold the property, you have to buy a property and you put it in the name of a corporation. Now it's time for tax declaration. You would like to do your tax declaration. Where do I do my declaration? Do I do my tax declaration for my company in the Dominican Republic or I do it in the US? Well, the number one thing, if your company is registered in the Dominican Republic, you are subject to all the tax obligations, all the formalities of the Dominican Republic. I'm not saying that as a US citizen or a Canadian citizen, I'm not saying that you don't have to do any declaration in your own country. That is something that you have to consult with your tax advisor in your country. It is always important to get the answer of an expert before you make such a decision, right? So definitely yes, I have a corporation here in the Dominican Republic and I have a property in the name of this corporation. I do have to do my tax declaration in the Dominican Republic. Now, the next question, are this tax declaration related to the property or to the company? It is strictly related to the corporation, not to the property, because companies are subject to some sort of taxes and properties will be subject to a different taxation. I will be explaining all this now. Now we already know that the simple fact of having a company registered in the Dominican Republic, I will be subject to tax declaration in the Dominican Republic. Is that applicable if my company is registered in the US and then I just get it incorporated in the DR? The answer is yes. If you have your corporation in the US and you get it incorporated here in the Dominican Republic, in order for you to manage your property, definitely yes. Your corporation from the US that has been incorporated in the DR is subject to all the tax obligations and formalities of the Dominican Republic. So the answer is yes to the question. If the company is from the US, you do have to declare here in the DR. Now, that takes me to another question. Do I have to incur in dual taxation? Dual taxation? The answer is no. Once that you pay your taxes in the Dominican Republic, you don't have to pay taxes again in the US. There is no dual taxation. Neither with Canada. If it's Canada or the US, please be advised that there is no dual taxation between the two countries. We have agreement and the practice with previous clients, with the experience that we have, there is no dual taxation between the Dominican Republic and the US or between the Dominican Republic and Canada. Which means that once you pay your taxes in the DR, you will have to maybe you have to declare, and then once again, I recommend to consult it with your tax advisor in the US or Canada, but absolutely no dual taxation between the two countries. Now, we have those few questions answered. Now we go company versus individual. Now we know that it doesn't matter if my company is from the US, I still have to pay taxes in the Dominican Republic as of the moment that I get it incorporated into the system. In order for me to be able to buy a property in the Dominican Republic with my corporation in the US, Canada, or any other country, the very first thing that I have to do is to get my company incorporated in the DR. Once I get it incorporated, as I mentioned before, it is subject to all the formalities and obligations of the Dominican Republic. Now, let's go corporation versus individual in terms of the tax obligations related to the project, to the property. The previous information I was giving was strictly related to the corporation. Now we're going to talk about the property itself. Let's say I have a property, I'm interested to buy a property that is worth $130,000, right? $130,000. Do I put that in a corporation or I buy it in my personal name? Well, the answer that you have to do is, you have to ask yourself, if I put it in my personal name, what will be my obligations? If I put it in the corporation, what will be my obligations? If you put it in your personal name, there is zero obligation. There is zero obligation. You don't have to do tax declaration. Your property is not going to be subject to any property taxes, meaning that you just put the property in your name and you forget about it. There is no extra process for you to do when you put this property that is worth $130,000. If you put it in your personal name, there is no obligations at all. What happens if I do the other way around? And then now I put the property and the corporation. What are my obligations? Well, my obligations, number one, is that I have to pay the equivalent to property tax. Companies are not subject to property tax, but they pay something that is equivalent to. And that equivalent will be 1%, right? 1%. This is what you pay. This is the, oh my God. Lawyers are not good with numbers. Let me do that again. So what I have to pay, as I said before, is 1%. 1% is what I have to pay on this $130,000. That here is zero obligation. When I go to corporation, that will be 1%. On top of the 1% on the $130,000, I also have to keep my company up and running. And in order to keep my company up and running, then I have to pay an accountant. And I have to renew my registration, my incorporation documents. I have to renew that. So when you multiply the 1% here plus the accountant and my renewal, the registration that I have to renew, you will be paying an average $1,800 per year, right? Per year. This is going to be your obligation if you go from individual to corporation. So you go from $0 here as an individual to $1,800. So there you have the answer. If this is the type of, you're looking to buy a property of $130,000, this is the example right there. What happens now if instead of $130,000, I'm interested to buy a property that is worth $150,000? $150,000, right? $150,000. I will say the answer will be exact the same. You will go from $0 as an individual to around a minimum of $1,800 a year, right? Why is that? The reason is because in the Dominican Republic, if your property is below $150,000, there's zero Property taxes. Property taxes. There is no property tax when your property worth 150 or less. How about if my property worth a lot more than that or much more than that? Let's say my property worth, the property that I'm looking to buy is worth $250,000. $250,000. What happens to that? Well, as an individual, my first $150,000 will be property tax free, right? Will be property tax free. And here, I have to pay from the very first dollar. So I will have to pay 1% from the full $250,000. And here, I will only have to pay the 1% based on $100,000, right? See the difference? So I'm saving here. When I put it here, I'm saving. Once again, all the fees associated with keeping the company up and running will continue to be present, right? So on top of the 1% and 250,000, 1% on that, then you have to multiply the fees for the renewal, for the accountant, and this is the cost associated with having your company up and running. Let's say that the reason why you're putting this property in the name of a corporation has nothing to do with taxes. It has only to do with the fact that you would like to keep your asset protected. You want to have your asset dissociated from your personal patrimony. Then that's a different story. And now I will assume that all this is clear to all of you. And if you have any further question, you can always leave us your comment or get in contact with me directly for a formal consultation, and I will be able to explain that. And the more money you put here, like here, you will always have the first $150,000 will be tax-free. And the 1% as an individual will be only on the difference. So you will never pay him the full amount. Now, is that applicable to if I have multiple properties, always going to be the same? No. That exemption here, $150,000, is only applicable, let's say, to the first property, or let's say you have two properties. One is worth $100,000 and the other one is worth $150,000. How much do I pay? Do I get the exemption for both properties? The answer is no. You only get the first $150,000 tax-free out of your total patrimony. Whether you have one property or multiple property, you will always going to receive a total of $150,000 property tax exoneration, right? Now, as I was explaining in the beginning, if the reason why you want to put the property in a corporation has nothing to do with tax and you're just looking for asset protection, then it's a different story. Then you might be open or willing to pay for your asset protection. So if your concern is because of asset protection, then you should set up a consultation with us and we will tell you what might be best for you. Please feel free to leave us your comment. If there is any other topic that you would like us to cover, leave us your comment and I will be more than happy to get back to you. See you next time.